I said all the titles about Tangent Capital. Thank you so much for coming, Bob.
My pleasure.
So this is an exciting morning, both for Turkey and for the U.S.
Yes.
But let's come back to U.S. Payrolls in the U.S. rise 165,000 as unemployment drops to 7.5%. How should we read this?
I think we should read this cautiously and skeptically. I know that everyone wants to be excited, and it does sound good, and it's a beautiful day here in New York, so everyone wants to go out and buy stocks. But I do think we have to look behind the headline a little bit and know, for example, that one of the things pushing the unemployment down is part-time jobs keep going up, involuntary part-time jobs. So we're still not seeing a situation in which people can find the jobs they really want to have. They're taking low-paying part-time jobs just to do something.
What do they want to see in terms of monthly addition then?
Well, what we don't want to see is what we got last in this month was 250,000 more people, almost now 8 million workers are involuntarily working only part-time. So the total jobs number, the unemployment number, I think is a little bit artificial, and we're getting into something that some people call a barbell economy, where people with very high-end college degrees, very skilled workers, no problem. They can find jobs. But a huge percentage of the population is not in that position.
Especially the adults, right?
Yes.
Discouraged adults.
Many discouraged adults. Many young people graduating from colleges with the wrong skills, and they can't find work either. So I don't mean to be pessimistic. I'm an optimist by nature, but I do think we have to look at this with a little bit of skepticism.
But how come the investors are reacting to it positively? Look, we're looking at it. It's all green. They're buying.
Beautiful.
Is it the Fed? Is it the expectation? Because they are still below the targets that Fed put. Or do you think Fed is going to be confused with these numbers right now?
No, I don't. I think the Fed's going to see pretty much what I'm seeing. That the headline number really is good. But remember that overall workforce participation is at nearly an all-time low. One of the main reasons these numbers are down is so few people are. Some people are so discouraged they're not looking for work at all anymore. So I don't think that the Fed is going to be confused. I think they're going to keep buying $85 billion a month of securities. The Bank of Japan, of course, is aggressively buying. So when you look at the world's central banks, the ECB just lowered its rate to its all-time low.
Yesterday, that's
so
right.
the entire world is engaged in liquidity. They're pumping liquidity into the system. Now that liquidity has to go somewhere. It just has to.
And where is it going?
Unfortunately, it's going into assets that are not actually generating real new jobs and creating a robust economy. It's going into the stock market. It's going into some more bond buying, which is kind of ridiculous, but it's going there. And it's going into some real estate. But even if you look at real estate, for example, everyone looks at the housing prices in the U.S. and go, fantastic, housing prices are up.
Yeah.
That's true. But who's buying the houses? It's financial institutions who are buying the houses and turning them into rentals. It's not single families. It's not real families. And so that is another sign of concern for me, because if you look at these families, what's happening is the prices are rising, but the real incomes are not rising. So the only reason that they continue to be affordable is the absurdly low interest rate environment. If we were back to anything like a normal interest rate environment, these homes would be unaffordable and increasingly unaffordable for lower and middle class families. So once again, I really worry that we're segueing into a barbell economy where the wealthy do extremely well, but an awful lot of people do extremely poorly.
You said, unfortunately, the money, the liquidity is going to these wrong assets. And you are the author of The Alternative Answer, which is a book that's going to come on May 14th.
Yes.
So if you say that the money is going to the wrong assets, which one is the right assets? Because you wrote the book about the alternative investment.
Yeah, so my proposition is that for the reasons we were just talking about, some of these factors look very, very good. Others of these factors look very, very bad. It's really, truly impossible, as we all know, to predict the future. We all like to come on TV. I like to come on TV and say, this is going to happen, this is going to happen, this is going to happen.
It's so hard.
It's really, it's beyond hard. It's impossible. We all know that from just our daily lives. Predicting the future is impossible. So what my proposition is that we need to be investing not for one future, but for many futures. And there are ways to do that using alternatives like hedge funds and private equity investment, venture capital, investing in real assets, investing in income strategies that don't have any interest rate risk in them.
Commodities?
Commodities are a little bit, to me, a little too volatile for most people to go into.
Nowadays especially.
Yeah, it's just, so I don't recommend currencies as an asset class. If you want to invest behind a great manager,
yes,
that's one thing, but generally I'm not a big fan of commodities because I consider them too volatile. So the point that most people don't really appreciate is simply this. Stocks and bonds represent a small sliver of the potential investing universe, just a small portion. So if you believe in diversification, and most financial professionals and brilliant people like you do, right?
Yes.
Why are you diversifying inside of such a small band? Diversify really across all of the asset classes, and you'll have a much better chance of doing well in the long run.
Even in a global platform, would Turkey be in it too?
Turkey, of course. That's a fantastic economy.
Let's go back to Fed, Shelby, because you mentioned just a second ago that you expect the Fed to keep buying. So
yes.
You do not foresee an exit strategy before the end of 2013?
That's correct, I don't.
So when do you expect them to get out?
Well, at this current rate of job creation, it's going to be, 2014 before they get down to their target. What they've said is that they're going to keep buying until unemployment gets down to 6.5. We're still a long way from that, and especially, again, when you look at the quality of the jobs that are being created here. We're creating a part-time work economy, and that's not really what the Fed meant, 6.5% kind of real jobs. So I don't see them backing off of this for quite some time. And I think also what's very important for Bernanke is he said very clearly 6.5.
6.5, that's
and
right.
it's his whole credibility is, if that's what I said, that's what I meant. So I don't see him making a change in that at all.
But he's leaving. And I wanted to tell you, my time is up, but last 10 seconds about your book. I want to close with your book, The Alternative Answer. What is the thesis of the book?
That there are many opportunities for people to invest outside of stocks and bonds, that the big endowments and the most successful investors in the world have used for 20 years and profited mightily. Those opportunities are available to average people, as long as they understand the opportunities, and that's what the book is about.
I have to have you on May 14. You bring your book, okay, Bob?
Okay, I will.
Thank you so much for
Thank
coming
you.
again. Evet, burada sohbetimiz sona erdi. Yatırım fırsatları ve alternatifleriyle Bob bize detaylı bir şekilde bugünün verilerini ve nasıl değerlendirmemiz gerektiğini anlattı. Söz tekrar sende Kübra'cığım, İstanbul'da.